Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fine.
All right. So I am sorry I'm super late. I didn't realize the time, I guess. I don't know. Took me a while to get ready this morning. And oh man, I don't even have, and my machine like restarted. What's with that? It decided to run Windows Update without telling me, I guess. That's bothersome. How come I'm still not hearing? Oh. Okay. The charts. Oh, you had to move. Spoos. Oh man, that looks so bad. Do you think they'll make a new low today? Yeah, end the week on the lows. I bet you we're gonna end the week on the lows. Damn, look at the treasury just shooting out there. I missed something. Oil on the rise a little bit. Gold and silver getting crushed. So just based on the correlations that I'm seeing here, it must have been something very deflationary, huh? Like a growth scare of some sort. Kappa is also taking a hit. Japanese yen shooting up. Wow, that's a big move in the Japanese yen. And Bitcoin new lows as well. Ooh, boy. What did I miss? Wait, what happened? When was this? Oh, this was like earlier action, though. I've been like reading about other stuff. Morgan Stanley quants warn of a risk of further defrothing as retail positions as retail is heavily positioned. Futures tumble as AI euphoria goes into reverse. The nervousness is palpable on markets and it stems from different corners. I got too many things in my head today, man. European equities opened broadly lower with all major indices in the red as sentiment soured following weakness in APAC trade. U.S. equity futures are weaker in pre-market trading as tech continues to lag on valuation concerns. So it seems that there's not a specific headline. All right, let's come over to financial juice and just double check that there wasn't any data releases or anything. No. I don't know. That one doesn't quite make sense. Do any of you have other theories? I would think if it was further concerns about AI and tech and, you know, just the London traders were selling it or something like that, I wouldn't expect the treasuries to be up so much and so quickly. You know? So that is very interesting. Right now, it looks kind of slow. We don't have a lot of data releases today. So I would expect the action in the treasuries to be pretty tough. But given we're up so much, 2-year hits its second standard deviation on the dot. And hey, guess what? Oh, we got that bug again. it's telling me an item with the same key has already been added. Yeah, it's got to be something specific to me, like that my data is corrupted somehow. Okay, so we got too much going on here. We need to make a list. Let's change this a little bit to prioritized tasks. And they here investigate projected range errors. Number 2, investigate order flow data discussions. Talk about strategy and Substack. Okay, I might be missing something, but let's start there. Let's do this one first. Talk about the strategy and the Substack, because once I start getting into programming, it'll be boring. Yeah, I'll leave. Right? So I was thinking about this yesterday. We've been having this discussion. I was like, well, maybe what I should do is I should create a Substack, because I think the way that this started was going on to TikTok and having trouble with TikTok and thinking, well, like there is some misalignment there, because you're teaching people how to trade, but most people are going to fail at trading, and you're talking about these technical things, but ultimately you really need to be informed to be a successful trader. So the most valuable stuff that I can provide to people is kind of more of the informational inefficiencies, and Substack would be a really good way to do that. But I wasn't completely satisfied with that, and the more that I thought about it, the more I kind of thought, actually, you know what, this is avoiding the main issue. Like that is an issue, but that's really not the problem in terms of like growing the channel and things like that. The real problem is we're just not popular enough. That even 16,000 subscribers is tremendous, is amazing, but we need to be like 50,000 subscribers to really accomplish some of the things that we want to do. Like, I could make a Substack. I think there'd be a lot of good things about the Substack. It would probably push me, but it wouldn't really help that much. I think the number of subscribers that we would get from that at first would be really, really small and wouldn't really make a dent in anything. It would be a lot more effort and time for not really a whole lot of payback. And the reality is I've got to become more popular before I do something like that. So how am I going to do that? I think maybe TikTok is just not the right format. Because if I try and make a video where I'm actually talking about stuff, it just doesn't pick up. I think that people just want to be entertained on TikTok, and they don't have the time to sit down and like watch you rant about order flow or something like that, you know? So I could try completely different types of videos on TikTok that are with the intention of just trying to be entertaining, I guess. But even if you were bringing people in that were entertained, that wouldn't necessarily bring us the audience that we need to accomplish what we want. So it's not TikTok isn't going to be the way that it is, and starting a Substack isn't going to solve the problem either. So probably that means that we should focus back on YouTube. We just got to find the right thing on YouTube. And that one has been dismissed because, you know, I made a ton of videos. But you know what? I didn't necessarily... I made some videos that I thought people would be interested in, yes. But, you know, I really didn't make a video that, like, really... You know, I don't know. It's just, how are you going to capture people's attention? But I think I have it. I think I've got it. Got a video idea. It's got the clickbaity title. It's central. And I kind of thought that maybe I'd already made a video like this, but I haven't. So I need to make a video like this. And it's just going to be... I really think that this is it. Like, it's just going to be one shot. I'm going to make this video. It's going to work, and the channel's going to get huge. That's what I think. So we just, and I'll make a video. See, as soon as I tell you what it is, you can be like, oh, yeah, I know what you're I'm going to make a video, and it's going to be called The Secret to Day Trading. That's it. The one thing you've got to know. We know it. You know what it is. Don't need to go into it. To be a good video. And I can go into, okay, well, you might not believe me. So here's all of the data that we have that brings us to that conclusion. And here's a framework so that you can utilize it effectively. Right. What was... I didn't catch that part. I think my mind was already somewhere else before you said that, so I didn't know what words you were referring to. Oh, the secret to day trading is don't day trade. Yes. Well, you know, I was thinking about it because if the secret to day trading is that the market is statistically efficient but not informationally efficient, not that I'm going to say it that way in the video, but I think that that's the most accurate way of saying it. So if that's the case, why don't more traders trade by that philosophy? And I think the answer to that one is that everything in the industry is really geared towards enticing you to trade more. If the market is more statistically efficient than it is informationally efficient, the amount of times where you really have the informational edge, it's going to be, you know, it's not going to be an everyday thing. And that's not enough trade for your broker and everything else in the industry to run on. They want as much noise as possible. They want you to trade as much as possible. And so everything, all of the incentives are designed around causing you to trade more, when one of the big secrets is trade less, if at all. Yes. I think a video like that could do really well. So I should make that. Now, I also think, though, I need to make a video about market depth data because, you know, every once in a while, people will come in here and they'll ask us, like, the difference between tick replay and live data, for instance. But, like, I'm seeing these people on Reddit getting really uppity about things. So let's see where we're at on this thread over here. So here was a post in order flow trading, and they were saying we need real volume footprint. And then they said, okay, here is Sierra charts, and they called it true. And then there's trading view, they call it synthetic. Right. And then it kind of goes into, okay, so what do they think true is? They say that true source is actual aggressor data from the exchange versus TradingView inferred by comparing trade versus the bid/ask. Is that actually how TradingView's indicator does it? I don't think it actually is. But it depends. I think that the main TradingView chart. Well, let's go find. Or maybe we'll ask ChatGPT. Yeah, we're doing this backwards. We'll deal with the thing like, how does TradingView determine I thought that they were saving it on their side and sending it to you. Okay, so ChatGPT seems to think what I thought, which is that it's either historical data or it's doing it from a one-tick data source. Okay, so basically, both of the things on this picture are wrong, right? Wait. Sierra Charts does have access to MBO data, though, right, Octavius? Like, I don't think everybody gets it, but you can get MBO data in Sierra Charts, yeah? Okay. Octavius says yes. Okay. So I told them, I mean, no, you don't. The difference between MBO data versus inferring it from the current bid/ask. So I ignored, the misinformation about like what is each platform doing, and it was just saying like the difference between MBO versus inferring it with the current bid ask. Like in a worst case scenario, it could be 10%. Okay. And that's really, when I'm talking 10%, that's like comparing it directly to like cumulative delta. Like what is the net? You look at a move and what is the net change in cumulative delta? It's going to be, give or take, 10%. Worst case scenario is what I mean by that, right? So that will matter if you care where you are in the queue. But is it going to change like the overall signal that your footprint chart is giving you? Probably not. Certainly not enough to justify an extra $100 a month for the extra data, is what I said. I was up originally, but it looks like I've been downvoted because I pooped on footprint charts, or the way that they were using footprint charts, and they didn't like that. So this person says, you've even compared footprints, a real one versus TradingViews. And I said, yes, I programmed that. He said, I can't tell if that's a yes or no. Well, okay, so now we have to get deeper. I said, I have tested the data extensively, but you could be talking about 6 different things: market by order data, using live market depth data, tick replay data, running against one tick data series platform specific cache data, or the difference from one footprint chart's implementation to another's. I was clear. You take a screenshot of a normal footprint, basically any platforms, and then you look at a screenshot of TradingView's footprint and proceed to question how they're even charging that. Trimming 2 giant oak trees? Whenever I hear like cutting down a tree, my ears kind of perk up. I'm like, okay, what kind of wood is that? Oak? Well, you might have some interesting stuff in oak. If it's a walnut tree, then I'm like, please, you need to give me some. Let me come over and do it for you. Like if you, well, I wouldn't be able to travel all the way to Florida. But like if someone locally was like, yeah, I have this old walnut tree, we need to cut it down, to be like, please let me do it. Hunt the wood. Anyways. So this guy thinks that he's being clear, but so he might be clear on like, oh, here's a specific test that I think you should be doing. But the issue is that I don't really think that that is showing what he thinks it is. And yes, there's going to be differences, but how do you prove that one is better than the other? Right? Been a tough couple of months, dude. It's been a tough couple of months for everybody. We're in a recession. It's really what it comes down to. And your specific issues probably have nothing to do with the recession, but I don't know. That's just kind of seems to be the way that things go, is that it's still tough for you, even if it has nothing to do with the economics. Do you ever notice that? It's like everybody else around you is manifesting misery or something. Mm-hmm. Like the bigger thing here is like, why would anybody be trading futures with TradingView's footprint chart? I tell you what, man. I am so fed up with the internet this week because it's constant people that are just so pompous and so absolutely certain that they know everything that are saying things that are just objectively wrong, and like not just objectively wrong, but like embarrassingly wrong. Like especially in the trading community, it's like every comment that I see in retail trading threads are things that people at the institutions are reading and laughing their heads off. Every single freaking comment. And then these people will argue with you to the death about it. It's just so wild. How can people that are so wrong about everything all the time be so sure of themselves? Like, I know there's like Dunning-Kruger and all that sort of stuff, but like the prevalence of it just doesn't compute for me. Why is it that every interaction I run into is some idiot that really doesn't know what they're talking about? I just don't get it. And it makes me be like, well, stop talking to people on the internet. Which I could totally do, but then what am I going to do? Like, I'd be bored. I'd be too bored. Last 3 months of the year are like negative confluence months if it's going to happen, and it's horrible and or expensive. That's when it happens. I hope nothing bad happens this winter. This one had 16 more replies. Was there, did this really? No. I read all that already. Is that the only one there? I'm just wondering with this order flow thing. Like, should I make a video about it? Should I go through like, here are the different ways that it's calculated and here that your platform might be doing? Is there like some marketer out there marketing that you need to buy MBO true data, like a Sierra chart saying, well, we have true data, and they're telling everybody that you need to have true data now to really trade order flow? Just doesn't make sense. All of these people have a really strong opinion when they really about such a nuanced topic as the specific implementation, specific algorithms used by various order flow methods is like, doesn't make sense that they would even be talking about it. Anyways, I'm going to start digging into the code here now. There's definitely something wrong, even if Uzi's not having a problem with it yet. There's definitely something wrong. So I'm worried if I just come in and refresh the chart. Okay, we still get the error. It's telling me an item with the same key has already been added. And I'm thinking, how can that possibly be true? Because if it comes in and it gets the value, like the first thing that it does is it looks for the value. And then it tries the other one. So that does not make much sense. Do I have debug turned on here? I do. I don't know. It's a really bizarre error. So the logic is basically, I can show you this bit of code. The logic is basically, I check the cache, and then if I don't find it in the cache, then I go to the website and look it up. And then if I can't find it on the website, then I just use the default. And here it will append value, right? So that's where it's trying to add like what I've just looked up. So why would it be trying to, it not find it in the cache and then immediately afterwards it tries to add the new value and it says the value is already there. That does not make sense. Oh, well, that would maybe explain it. It's a bug that is in the more recent. You don't have the most recent version of it, probably. You will run into a different error. Oh, welcome. Hmm. Hmm. Oh, you know what? So maybe it's in the on state change. Okay. Okay, I have a theory.
Block by.
So the reason that it's bugging out is that I have the 13th in there twice. It's been duplicated for some reason. The question is, how did that duplicate value get written to the file? My mice have become so advanced here, bathing. What the heck? So the issue now is if I delete this and save it, it'll work. Doesn't explain how the bug originally happened. But it must be that it gets written twice somehow. Where does that file get saved? It's under your NinjaTrader documents folder, which could be in different places, but is basically going to be under documents / NinjaTrader 8. And then I make a saved folder underneath of that. So I think so I don't know exactly how it happens in the first place, but I am seeing that like if it tries to append and then it tries to put the new value in it tries to put the new value into the local cache, the memory cache, and that fails, and then it still writes it too. So I'm going to just change that. I'm just going to put a try loop around it. And then... So that will avoid corrupting the data file. But I'm still really confused at what is the scenario that corrupts the data file to begin with. When that happens, that should never happen. But I have a debug statement in there, so when it happens. But we might not know until Tuesday. So I guess we'll see. Down to the bottom of the sea. I'm getting really worried about markets, right? Where are we at now? Okay. Not to new lows, but sure are eyeing them. So I made a TikTok a couple of days ago at the beginning of the week where I was like, is it happening? You know? Well, when I said that, it didn't necessarily mean it was all gonna like collapse in that one day. But there was a definite sentiment shift there, wasn't there? And I think that what you're seeing today is them saying, yeah, there's like been a real change that's not just going away. Does that necessarily mean a complete crash? Doesn't necessarily have to. But I do kind of think that it will result in the AI bubble popping. And we just see how bad it popping actually happens. The non-existent bubble. Well, I have an issue with the term bubble altogether, right? See, man, I hate how many things they're coming in here where it's like, well, they're saying this, but then I have to say, well, it's more nuanced than that because what this means is not actually what this means, and you have to actually look at this and all these. It's just, but you have to go that deep to understand these things. So I don't like the term bubble because the term bubble kind of presupposes that there is actually a real true value to things, which is nonsense. Right? It's just the flows. There are the flows, and you can get into a situation where the flows are basically guaranteed to become negative. Right? So people are saying there is no AI bubble because they think that the valuations for AI are justified because AI will be so profitable. Yada, 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 right? But what I'm saying is that we have created a situation where you're very likely to see future sell orders, regardless of what the valuations are. And why is that? Because AI companies have made commitments that they cannot fulfill. So you look at the valuation of the company, and maybe it's right based on their current commitments. But if those current commitments can't actually be fulfilled, then your valuation is actually wrong. Right? So if you get any kind of unloading of all of that debt, it's probably just going to completely unravel. Now, I got to be careful because I'm not entirely sure, and I'm not even sure how I would calculate this or determine this. I don't know if that unraveling necessarily has to mean a complete crash of the market, 50% decline. It seems to me like that is what would happen, but I don't actually know if it has to be that, right? It could be that AI companies get hurt, but then the rest of the market is okay and we don't actually have a recession or anything like that. I'm still... So we're seeing the 10-year Treasury retrace this move up that we've had. Starting to get pretty aggressive now. But what caused the rise in the first place? Doesn't quite seem to fit for me. Ah, crap. I think I just tried to refresh a chart because I noticed that the cumulative delta was all messed up on it. And of course, it crashed. It actually still shut down, so that's good. Man, look at him go. Like 4 ticks just then. Michael Saylor expects Bitcoin to rally from here. Yeah, of course. I guess so. I didn't really explain myself. Like earlier when it moved up and I'm like, well, if it's just moving up because of concerns on AI and the S&P 500 going down and everything, why did the treasuries move up so hard? And I didn't explain why I thought that was weird. Because isn't the correlation that equities down, treasuries up? So the correlation is in line with it, right? But the whole thing that we've been seeing this week is people repricing the probability of a December cut down to like 50% now, with a number of Fed members saying things that seem hawkish. I think that given the current data, maybe 50% is okay. But I think that once you get all of the data and we get to the date, it's going to be clear that we need another cut. So I still think that they're going to do it. But the action has been to the downside as they kind of question the probability of it happening. So why the up move? And then is what we're seeing right now, them saying, no, that up move was nonsense. They're going to cut in December. Something doesn't quite fit. There's got to be a piece of information I'm missing. Which means no trades for us, but being pro Putin is so cringe. Yeah, it is. Was Reddit doomed and gloomed back in 2021, 2023 when the job market was great? No, it was zany. It was like every day we were sitting here complaining about how big of a bubble we had to be in and why isn't the Federal Reserve raising interest rates. And man. Valkyrie talks about how she had to donate her closet full of Balenciaga after the PR disaster. What? I was expecting to come over to Reddit and see a bunch of stuff about Trump and Epstein, and I haven't seen any yet today. I'm a little bit like, That makes me feel a little nervous for some reason. From r/layouts, my coworkers are being laid off and I feel guilty that I am not. Yeah, well, you should quit because I guarantee you that life's going to get harder for you. Coming up to the inventory cost basis sell at 27. There is some big iceberging there. Did I adjust? I don't think so. Well, you know, the kids may have bumped it, but when I look at like the levels that are coming out of OBS, they are still within the range that they typically are, between, you know, like -10 and 20 dB. I should probably address the microphone at some point and get a new audio interface that's got higher gain on it. Maybe your speakers are starting to... I also want to get new speakers. When Seth finds a new day job, I don't want to start thinking about that again. I would like to get new studio monitors. I think that the KRK rockets that I have are not serving me well enough. I'll often like do a session, think like, oh, okay, this is great. Oh, see, you know, I was pretty into it. And then it'll be a few months and I'll load it back up and I'm like, this is noise. How did I ever listen to this? What the heck? I would love to argue, and well, but I know exactly what I was gonna get. Hold on, where is it? I think I wrote it down. Yeah. I wanted to get Kali audio in 8v2, which is about $1,000 for a pair, which is not bad. I don't think that I spent that much less on the rockets. I do wonder though, like I might let's ask ChatGPT. I forget what's the name of this one. With JBL. Gotta love the price of pro audio DIY can be a lot of fun, but a million rules to follow to hit real high. Yuck. Dude, it gets weird. Wow, it's thinking way harder about this than I thought it would. It must be having a hard time finding information specific to the particular question I'm asking. Because probably nobody has ever asked, well, if I paired this and this. If instead you want monitors that deliberately hand the low end to the sub so that you never have to worry about bass in the mains, a smaller satellite like the Kali LP6V2 or Yamaha HS are more typical choices. You want the most accurate, highest resolution near field, which is basically what I want. I think I still get those ones. There's a good chance it's just going to throw advertisement propaganda. Yeah. That isn't always the right answer. So the specific subwoofer that I have has this interesting like lub mode So basically, like, what did it say here? Like the THX standard is 80 hertz, right? The THX standard is 80 hertz. So normally you get a subwoofer, you do the cutover at 80 hertz, and that's like built into the subwoofer, because it's like you send your outputs to the subwoofer. At least that's the way that this one works. You send the outputs to the subwoofer does the cut for you, and then it passes up to the other monitors, right? And this one has a little button that when you switch it, it goes to, the cutoff is like 100, 120 hertz or something like that. Basically, to more accurately reflect what it is like in a club environment. And so I really like that, because if I come in and I turn it up, it feels like a club, and I can see how my sub bass is going to behave like in the club environment, and that really helps. And so that was like the thing when I got them and I did that, and that was the thing that made me be like, oh, okay, yes, this is going to be useful for the kind of music that I'm producing. But I think that the problem that I have with the Rocket 5s is that they don't have the best fills. And I have them like up above my displays, kind of tilted down towards me and all of this sort of a stuff. And so what's happening is that you have to be sitting in exactly the right spots. And like, there's just all sorts of problems with that, right? So that's why I felt like I should upgrade the speakers. And so that would include, because these are like 8 inches, right? Well, based on the size, I think that they're 8-inch. Large catch. Well, the room is pretty good. The room is pretty good. Like, can you see in the upper? I guess you can't really see it, but I have a bass trap there. I have 4 bass traps. Yeah, 4 bass traps, and then I've got 2 kind of ones on the side there to block like first reflection. And then I've got these blue ones, which you can't see right now, but got these blue ones that I can kind of move around to block large reflective surfaces. So, especially on the low end, it's pretty good. You know, it's kind of funny. I got all of that room treatment because with the older microphone, you know, it would catch so much background. And we did that, and it kind of got rid of the echo and whatnot. But now you use a dynamic mic for the stream, and it doesn't matter anyways, but it's good for the production. Let's see if we can get ChatGPT to give me a better response. Well, you still have, yeah. It's been a lot. It's been years since I've done it, but like I've done the whole row, like measuring it and everything. So it's pretty good on that thing. It really has more to do with the speaker itself, the like how far off you are out of the sweet spot affects the accuracy of it. No, I don't think that I have nodes though. I don't think that that's it. Like you're saying, you think that you're getting comb filtering and that certain frequencies are being boosted or suppressed by. I don't think that that's what's going on. I mean, well, yeah, but it's a pretty good environment on that. Like I have enough room treatment. That should not be a major issue. So let me try and explain it. I have to draw a picture, I guess. Okay, problem number 1. They are KRKs. Okay. So there are some specific problems with the KRK Rocket 5s. They're not as bad as, like, you know, these are actively hurting you, but they were the cheaper ones. They've got some issues. Okay. Number 2 is the tilt. So I've got this desk with computer monitors, right? And I've got 3 of them. So in order to get the speakers correct, or so that I can even hear them, I have these posts that sit up higher, and then the speaker sits like this. Except for that, then you've got like the tweeter. Okay, you've got the tweeter. And the tweeter is supposed to be in line with your ears. So here's me right here, right? Okay. It's supposed to be in line with the ears and it's not, right? So you don't get the high end correct. So that's why. Oops. I want to have a little eye there so that you can see that those are my ears. Okay. So what I have done is I have taken pieces of foam, and it sits on this foam, and then the speaker's like that, so that the tweeter points directly at my ear, right? And then from the top down, you would see here's me, here's the desk. I've got 3 monitors like this, and then the studio speakers are back here like this. And then the wall is behind that. Okay. So where you got to sit like where they cross over, but the angle, because these really kind of come out like this, right? And what I'm saying is I think that the range, that the thing, they're so far back and all of these sorts of things that, you have to be like in exactly precisely the right spot to actually get the frequency response that is neutral, and it's not. So, so basically if I'm actually over here, then what I get is not very accurate. So supposedly, if you get the Kali ones, then you get a bigger thing, so that I have a bigger range, and if I'm move around, it's still good. That's what I think is going on. If the speaker box you're interested in has one sharp corner and not rounded, don't buy it. That's the fronts of them are curved. It's still saying, hey, yeah, you can get smaller satellite ones instead. Kind of sounds to me, though, like, oh, hold on. There we go. It sounds to me like that they basically design all studio monitors to just be like the sole thing. And then if you're adding a sub to it, you're just adding a sub to it. Right? Give you a method of audio that might help you. Okay. What I really need to do is it's probably like hard to even freaking see anything now at this point. The treasuries are still moving down, man. It's not even really a super strong move in cumulative delta either. Oh, you know what? I need to check on if we need to stop streaming or not. Hold on. Okay, we're good. We'll go until the top of the hour. He's not there. Too sick to go to school, apparently. I've never heard of these. Oh, yeah. So what I was going to say was, what I really need is I need a second desk or something like that, where, okay, I got the desk and the monitor is here, and then I put the speakers on the desk like this. That's what I really need. A setup that just has one regular 27-inch monitor, and I'm doing everything on that, and the speakers are right there. Instead of trying to fit 3 monitors, a DJ controller, a keyboard, and all of the KVM switches and other nonsense that I have for the trading setup. Oh, and all the microphone, the camera, the lights. And I have one machine that is really dedicated for audio production. Is really what I actually need. And then that would actually solve the real problems, right? Another thing I've found helped is getting like really nice headphones with a what do we call these ones? Not a dynamic driver, but a the kind that's like a membrane. Anyways, and those have really good imaging, and producing with those kind of helps me resolve a lot of issues with like phase and things like that. Treasuries do seem a little bit more alive now that we're all the way down here. And what's with that huge order at 27.5? Michael Saylor's strategy is in meltdowns. Does that mean we should short it? Not long ago, I suggested that Michael Saylor's strategy incorporated, formerly MicroStrategy, might be the equivalent of a Ponzi scheme. Of course, nobody wanted to hear this, and I was permanently banned from r/MSTR for presenting a bare thesis, a subreddit for thoughtful discussion about strategy, provided that discussion is blindly bullish. I was accused, as all doubters seem to be, of either spreading FUD, because yeah, my social media posts can move the market, or not understanding leverage. For those still unfamiliar with the strategy saga, Saylor has pivoted his company away from enterprise software towards Bitcoin accumulation, effectively becoming a proxy vehicle for anyone who wanted exposure to Bitcoin through the supposed comfort of a NASDAQ ticker. To fund its Bitcoin reserve strategy, which hasn't been a serious player in the enterprise software business intelligence game for quite some time, started raising capital through convertible debt or preferred stock and endless equity issuance. Saylor's model rested on 2 assumptions: that the price of Bitcoin would continue to rise and that markets would always reward the company with a premium for the leverage it represented. And for a while it worked. The stock's value represented an amplified version of Bitcoin, and when Bitcoin rose 10%, MSTR rose 20%. The FOMO set in, and retail investors poured liquidity into Strategy. A lot of them argued, or at least parroted the argument, that buying shares of MSTR was better than actually holding Bitcoin because Strategy's leverage meant each share represented more than $1 of Bitcoin, so gains were amplified. The likely reality is that most of Strategy's retail investors are either gamblers or people who don't know how crypto works and are happily buying a ticker within the familiar and intuitive confines of a major stock exchange. And hey, by logic of Saylor's magic money printing machine, it is compelling as long as Bitcoin kept climbing. Strategy's leverage would compound those gains, and the premium on its shares would expand. In turn, the gambit even drew some academic attention. But as I argued back in March, you can disguise a simple concept in all the financial jargon that you want, and Saylor is a master of jargon, but if Bitcoin faces prolonged stagnation or decline, Strategy could collapse under the weight of its own leverage. Of course, Saylor has form for leveraging high-risk assets with extreme conviction. During the dot-com bubble, he bet on explosive growth in enterprise software, engaging in aggressive accounting practices to maintain MicroStrategy's stock price. Investors who look to Saylor as some kind of Wall Street genius would do well to remember that in March of 2000, an SEC investigation forced the company to restate its financials, a scandal which erased over 60% of MicroStrategy's stock value in a single day. Within months, the company's stock price had plummeted from over $300 per share to under $10, and Saylor's personal net worth collapsed from $7 billion to around $200 million. Saylor, through MicroStrategy, is considered by many students of financial and economic history to be the man who burst the dot-com bubble. And now, here he is again, same company, same conviction, just instead of .com, it's crypto. What could go wrong? Well, things are already going wrong for Strategy. As of the close of October 2025, Strategy reported holding about 640,000 Bitcoins, purchased for roughly $47 billion at an average cost north of $74,000 per coin. On paper, those holdings are worth about $70 billion, depending on Bitcoin's daily movement. But the company's stock has been sliding steadily or rapidly, depending on your perspective, recently hitting 7-month low as investors begin to doubt the sustainability of the scheme. Even as Bitcoin stays hovering above 100,000, Strategy's valuation is falling. The so-called premium that once made Saylor's leverage seem so brilliant is evaporating. In other words, his model isn't holding up. For younger readers, and those of you still in the denial phase of financial loss, this is what a meltdown looks like. The company is still buying Bitcoin, though at a fraction of its previous pace. That slowdown is because of another flaw in Saylor's model. Raising capital is harder when your share price is tanking. The most recent preferred stock offering, about $700 million, was framed as an opportunity to expand holdings. I think it looks like an act of desperation, a company bowing at increasingly unfavorable terms to maintain the illusion of momentum. Saylor's conviction has always bordered on the theological. Bitcoin, he once tweeted, is a swarm of cyber hornets serving the goddess of wisdom, feeding on the fire of truth, exponentially growing even smarter, faster, and stronger behind a wall of encrypted energy. Now, don't get me wrong, I too believe Bitcoin, which is why I actually own my own Bitcoin, but the markets don't care about believers. They don't care about the goddess of wisdom or the fire of truth. Markets only care about one thing, liquidity, and when leverage meets volatility, belief won't save anyone. The company remains solvent, of course, but the market no longer believes in the magic of leverage, and investors are beginning to suspect that Strategy may soon face a liquidity crisis. I suggested this would happen, that by tying the fate of his company to a volatile and speculative asset, Saylor was courting disaster, and here we are. Strategy's stock is crashing. Its Bitcoin purchasing pace has slowed, and its premium has vanished. Soon, its debt may start to outpace the value of its Bitcoin holdings, and then the real collapse begins. I hate to say, I told you so. I really wish that got into the more technical details of it, because there is this whole thing of like, at what point does the value of Bitcoin get so low that they have an issue? Well, if their average price is at 74,000, that's certainly one level that you could look at. But I don't think that that would be like, oh, we crossed that, and that is like, you know, then they're screwed. They're at 96 right now, so. That was, that article was a little bit too high surface level for me. Would have preferred something that went deeper. I wonder if APOL is still searching for a method of audio to give me. Wow, UT99 ported to browser with multiplayer support? That's amazing. Turns out it wasn't a direct theory, it was the theories of psychoacoustics I was thinking of, and now I have to quickly find a way to summarize it. I probably know what you're talking about. I wish it was like the way this started was, okay, got the Rocket 5s. And then I read a lot of stuff that said the subwoofer can really help making certain types of electronic music and stuff, like really good room treatment and a good subwoofer. So I did that and definitely made a difference. But, you know, I still have some issues where it's like, it just doesn't translate into the car the way that I want it to, right? So then, I was watching this video, and it was like a tier list of speakers, and it did a really good job of, okay, he didn't just go through all of the speakers. He also talked about, here are the differences between like a nice set of studio monitors and not as nice one. Like it, you know, and it talked a lot about like, it's not just about how accurate it is, it's a lot, like about how wide of an area that it's accurate in. And imaging and things like that. And that was where, when he talked about the speakers that I have, and it was like, okay, not only is these are the deficiencies in that speaker, but with where they are and all of that, it's probably pronounced. So that's what kind of made me think that I would benefit from a slightly nicer pair of studio monitors. Sorry, I don't like what ChatGPT was telling me here. I'm getting into the point where I don't think that ChatGPT would be very helpful for us, but it's interesting to see what it says. See, I think that what it did here is it gave, smaller like it's giving me cheaper monitors essentially. Specific speaker frequency placement meant to trick humans due to how we process sound. Simple words. It's tweeters in front of you, mids 15 degrees, left lows. Oh, that's right. Yeah, that is weird. I don't know. I was, messing around yesterday with one of my songs, and I made a couple of changes to it that I thought were really good. So I actually think these headphones right here, because when I mix with these headphones and then I go back to the speakers, it's works a lot better. These headphones are really tuned towards those vocal frequencies. So that's something that you have to think about, is that like the vocals in the track will stand out way more than they're supposed to with these headphones. But it's pretty easy for me to tell that difference and to say, okay, so you want the vocals at this level, and then when I switch it to the car or to my studio monitors, that then it will sound like the level that it's supposed to be. And I don't know why I seem to be making some of these small, but it was just like little issues that kind of bothered me about them, and now I'm just like, oh, well, I just need to change this, and it's fine. So the Treasuries have almost completely retraced this move, and we're well beyond now any of the volatility levels too. That's pretty crazy. Well, while this has been happening, it does look like that SPOO's started to find a bottom, at least a temporary reprieve, at least. Oh my god, guys, why are people like this? Something like, when I tell you about these things, are you sitting there going, "Oh yeah, that's crazy," or is it like, "Yeah, Seth, you're an idiot, and I'm just never going to say anything about it," right? So here's what I said. He said, "Have you taken it?" Well, I have, and I've tested the data in various different things. Now, you have to be specific, because maybe there's a difference between the built-in trading view footprint chart and some of the third-party trading view charts, and maybe there's a difference in NinjaTrader and Sierra charts. So like, it very, very much matters, the very specific thing. But like, especially if you're looking at a footprint chart, the numbers are going to be slightly different. The question is the difference make a difference to your trading? And my assertion is no. Although it might on the one tick data. Kind of maybe depends. So then I explained to him the difference. I said, I'm trying to get to the heart of what the assertion here is. For instance, the image asserts that Sierra Charts uses true MBO data, and TradingView infers it by the bid/ask. But most ER charts users are not paying for MBO data. They are inferring it from the bid/ask. And TradingView doesn't actually infer it from the bid/ask. It loads a one-tick data series and infers it by whether the bar is up or down. So if the question is, do you really need MBO data to effectively trade order flow? The answer is absolutely no. The difference is negligible. If instead you're trying to assert that TradingView is bad, well, then I don't see why it even matters, because who's trading futures with order flow data and doesn't already have access to better platforms? And he says, you should be a politician. I'm done with this conversation. Goodbye. What the fuck? It's like, I just gave you all of the information and explained all of the details, and then you're like, oh, throw your hands up? It's crazy. Is this not crazy? Is this not just like, why am I getting such a stupid response like this? It's absolutely bonkers. I'm not a politician. I'm just, it pisses me off, frankly. It pisses me off, and it makes me want to say something mean. So I'm going to say something mean. I'm so done with people, man. Oops. It's really annoying because that image macro is basically saying that order flow data is useless unless you're using MBO data, and that's wrong. Like, it's honest. It's actually, I don't know. Are you guys even still there anymore? I don't think you actually are. Hey, Paul is there, huh? I'm actually coming back and looking at it, and we have 4 viewers right now, which is kind of a little bit unusual for the time. But Slow end of the week. Yeah, it could be there's a Friday. Well, the treasuries aren't really active. I guess that's kind of one of the things is that when the treasuries start to like do stuff like this, we usually have more viewers and everybody's like, what's going on? Ah, this is so confusing. But I don't really have any good answer today, do I? So actually, it's quite the unusual retracement because it really retraced through and just blew through everything. But it's exactly the kind of situation I always warn about, right? Where we say, well, yeah, your line seems like it works really well, but if it really actually does work, it's probably fat-tailed. And here you go. Here's the far left tail today. Chaos is becoming more normal again, so people are expecting the chaos to happen. I almost see more shock from why isn't anything happening? Well, I think that more traders are harmed by trading when there's not really a reason to trade more than anything else, right? That's certainly what was always killing me in the early days. I just, you know, if we were to make a distribution and we were to say that this is like how frequent it is, and this is the negativity of a social media interaction, right? And we would expect it to be like a Gaussian distribution that, you know, most interactions are somewhat neutral and some are positive and some are negative. But it seems to me that the distribution is like this, that all of them are just really extremely negative. And it's like on any topic that is remotely technical. Because you could just say, well, Seth, maybe you're autistic or something, right? But I really don't think that some of the reactions that I've been getting the past few days from people can really be explained like that. Especially not, you know, I would have thought that people on a quote unquote order flow subreddit would be, you know, understand some of this stuff to some extent, but apparently not. They have no fucking clue. Now, what's with so many big live streamers just being completely out of touch? That's so weird. I would have thought that live streaming would help people stay in touch with their audience and coming from humble beginnings and things like that. But that is not how it has turned out. Look into Opsoid's speaker placement, and the cone of confusion will come as a part of that, which is a valuable part of knowledge over how we process sounds. Normal people aren't very entertaining. So you're saying that the reason that they became successful in the first place and were entertaining is also why they are out of touch. Why they are so likely to become out of touch. Maybe. I think something that's going on right now is that we are in a recession of sorts. Especially for the kind of people that I'm likely to interact with, because they're going to be people in the computer sphere, right? That this market is in a recession. Now, when you're in a recession, like I think that even under the Great Depression, unemployment only ever got to like 20% or something like that, right? So that means that most people are going to have jobs, but everybody is still going to feel strain, you know? And so that's why it feels like no matter what I do, I'm not having success. It's because the number of people that are having success is much, much smaller now. And on top of that, like platforms have changed, the competition has changed, all of these sorts of things. And so it's really like you have to be one of the most entertaining people. And if you're not like the top 1% of entertaining people, then you're just not going to have any success at all. And I'm not the top 1% of entertaining people. But I still don't understand why it makes it like that every interaction that I get from people seems to be on the far left side of it. It's always an extremely negative interaction. I just don't get it. Things are going good around here in Illinois. There aren't any jobs to apply to anyways, and my current job is now not hiring to replace my helper, making me do it all alone now. No raise in there, cutting my store hours permanently. Most likely to, yeah. I have done 2 serious interviews in the past month, because we are basically now to 1 full month since my last contract job ended. So I've had two serious interviews where, like, you know, I went through to the last round of interviewing or whatever. I don't think that there was anything in it. Sometimes I'll come out of them and I'll be like, well, they are actually looking more for somebody that's like this, and I don't know if I have that. Or, you know, there was one that I was also in this past month but didn't get to the more serious rounds. And I think that really what they wanted is they wanted you to say, well, you're a startup in this space, and my whole life is this one issue that you're dealing with. And if you didn't say that, then they didn't push you forward, right? And then I realized that afterwards. I was like, okay, this is like, you know, I don't know if I'll get called back or whatever, right? But nothing like that in these ones. They're all good. Now, I don't think that they've made either of them have made a decision. One of them said, we might be able to get back to you later this week. But when they say that, that means that you're not going to hear back from them until the next week. It's always the way that it goes, right? And I think if I don't hear back from them by Wednesday, then that probably means that I was not selected, and they're, you know, just waiting on the other person to accept before they tell everybody else that they didn't get it, right? And they probably interviewed like 5 different people, so it's like a 1 in 5 chance. So even I think I did a good job, and I think that I'm a really good candidate. You still just, where does it go from here? Now there's the other one that they said that they were they had many more interviews to go, and that they had a 10-day trip in between it as well. So I might not hear back from them until next week or the week after. Although on those ones, I would be very surprised if they just ghosted me. They'll tell me I didn't get it. And then beyond that, you know, I come in and look at it every day. Not very many jobs to apply to. It's definitely gotten to that point of the year where there's just not as many jobs listed. And I guess the point of what I was saying is, well, like if there's a recession, there's a recession, I think, in social media stuff too. So I'm probably not gonna like have that breakout moment. It's, you know, like hard to make that happen in the current circumstances. And it's only gonna be like the very top tier of people that are being successful. And those people are just like completely out of touch with that any of this is happening to everybody else. They think everything's just great. Was this a Paul? You guys know how stupid the video game is. War is still going on. BO7, Battlefield 6, Fortnite, etc. Black Ops lost the war when they broke everyone's BO6 games a couple days ago. Oh. You know what I keep doing? You ever get those? I did. I did get those certs. The starting your own fun part is harder than having the certs, though. Yeah, so kind of where that got stuck at was, okay, so you need to develop a strategy and all of these sorts of things. And so I did all of the work to kind of understand how a momentum fund works. And we made some videos about that and everything. But the issue comes down to, like, it's not enough to have a strategy. How are you making a strategy that is going to attract investment? How is your fund going to be different from everybody else's fund? That's going to cause rich people that have billions of dollars to want to be invested in your fund. And I can't answer that question. So I kind of shelved it. Kind of said, well, I'm glad that I did it. It was good stuff. If only for personal development and like locking down and studying, it was good. But I don't think that I can really start a business over in that space right now. I don't have what's, you know, I need, you know, fundraising, essentially. I need those big connections, and I have that. And I don't know how to get that. Dead internet theory, it's okay to just be another. I don't think that the people I'm arguing with here are robots, though. They're people. They're just, for some reason, really dumb and angry about everything. So it comes back to this thing where it's like, okay, if you have a problem with absolutely everybody, then maybe the problem is not them, right? But I'm not even talking about, well, you know, were they nice or anything like that. I'm just talking about, like, objectively, what is the truth of the thing? And we keep running into these people that will have ideas about things that are just objectively false. And if you understand anything about the issue, you know that it's objectively false. I don't pull this info, I'm not just like, I came up with this kind of take on it or anything else like that. No, it's just like, I've studied this stuff. This is the standard understanding of it, And then I get pushback from everyone. So then you go, okay, well, maybe it is me. But then all I do is I can look back at the information in the data. I'm not crazy. The internet keeps trying to light me and tell me that there's 4 lights, but I know there's 3. I know there's 3 lights. People don't like facts and proof. Like, it bothers me particularly that it's this one that it's about order flow. That I'll tell you something about order flow, right? Because it's exactly this sort of new that I'm like the only creator out there that's going to understand this stuff, be able to explain it to you, and then I explain it to you, and I get all these angry responses from people. It's just wild, just wild. This particular guy getting mad at me because I told him, yeah, I have compared the different types of data in the different platforms and their order flow. And I can't tell you, I mean, how many times have we sat here and gone through things where it's like, okay, this platform, the number is this, and this platform, the number is this, right? Yeah, we've been through like every, I don't know if we've been through every possible combination of these things, but like, we've compared this stuff a ton. And the conclusion is always, well, they're different, but we can't say if the difference is significant enough to affect your reading of it. You know that it's different enough that in a algorithm, it could cause the algorithm to trigger on a different bar. But then at that point, like if you trigger a bar early or a bar late, and that affects the strategy, is it actually that good of a strategy? Right? You're not telling them what you want here. I saw somebody the other day say that when you want to help people, you tell them the truth, and when you're trying to help yourself, you tell them what they want to hear. Especially in the trading space where it's weirdly 90% of accounts and stuff to try and tell you it's all in your head. All of you. That's the one that really makes me really... psychology is a cope for people that don't have edge. And then you come in with facts and numbers against things that happen. No, but all I'm telling this guy is that TradingView doesn't use the bid ask to infer trade direction. He uses a one-tick data series. You silly politician. The other weird one is the thing that is going to be different is trade direction. Which side it thinks it was on. It's not going to be price. Price, it gets accurate because each execution has that price reported back. So you should be able, like if you're looking at two footprint charts and they're different, you should be able to add the two numbers together on both of them and then they'll be the same. And so then you're looking at, there's a percentage and like, what is the average difference between the two? There's nothing quite like success to prove your point. Does your P&L for the last year agree with you? I think it does. I don't know. So with some of the messing around that I do and everything, it's kind of hard to objectively say like this is what my P&L is. And I haven't been doing live trading because I've been out of work. And so I've just decided to not do that risk during this time. So I think like really the P&L is 0 because I just haven't traded, right? I think if we looked at this week, I'm probably down on the week, actually. Want to look? Hold on, I have to log in. Because I had that one where I was like, let's just leave it and see what happens, and it ended up being a big loser. And that's not something that I would ever do on live. I would close it. Yeah, that's the past week. Oh, no. It actually is a net gain. Okay. Where's the largest losing trade? That's not it. That's not right. What the heck? That's not right at all. Where's my I guess there must be something wrong with Jigsaw. Well, that looks correct. Oops. Doesn't carry over between. No, that's not right either. Maybe the thing that I'm thinking about was last week. Oh, yeah, it is. There you go. See that negative 312? If I had closed it, you know, instead of doing that experiment, I think it would have been a loss of like 93. So something like that. But you'll see little aberrations like that everywhere. So we'll go over like to this year, I think it's probably okay. It is kind of funny, like that is the way that a lot of people think though, right? Oh, no, it says it's down. Oh, because, yeah, there was like these 3K losers that were like a different experiment. Should have been in a different account. I might put them in different accounts. Not quite. Oh, a lot of it was experimentation. Interesting. Okay. So then let's just kind of you know, cherry pick a little bit here. Ta-da! Oh, no. We have to cherry pick a little bit harder than that. 10. It's not updating correctly. (2025) 23/10 to now apply. Okay, cool. I haven't taken that many trades this year, like you can see. So how many trades? 30. It's not very much. Uzi should show. Yeah, Uzi should show us those last 2 months. I think that he's probably been doing pretty good. The net amount here is actually pretty good too. Yeah, I mean, when I look at some of these results, like I say, you know, if I was more active this year and I was trading the micros, I probably would have done okay. Would have done okay. It wouldn't have been amazing. The thing that is so annoying about this is, you know, like any argument that I'm having with somebody and that sort of a thing comes up, I can guarantee you they can say, okay, I've done X well for the, you know, I've done well over this time period. And I could probably go and find an equal time period in my own history that looks better. Like almost certainly I could find a time history equal in length that looks better than what they would give me. But it's just like such a dumb logical fallacy. It's like, okay, you think the earth is flat and I think that the earth is round, so let's play a game of Russian roulette and the winner is the person that's right, because obviously the winner, that's the person that's the most successful, so they must be the most correct about that thing. It's so dumb, but that's the way that traders think about these things. They're basically basing the veracity of claims based on a game of random chance. It just makes me like it makes me want to go like, okay, let's just not do anything ever. Enter. Don't need to stream. Don't need to ever post on social media. I want to crash out on social media, but like I know that I'll be so utterly bored and unhappy with my life that I'm not going to do that. I'm sure I'll see things much more positively if one of these jobs comes back and I get a full-time job. Ignoring results is disconnecting from the objective, though. Well, so if the results was like a 5-year history, but it depends on what your question is, right? If the question is so-and-so a good trader? Well, then, okay. Look at 5 years. This guy's performance versus this guy's performance. But that's not the discussion, is it? The discussion is, does the market actually exhibit X behavior? This person thinks that it does. This person thinks that it doesn't. The way to resolve that dispute is not look at who made more money in the past year. The way that you resolve that dispute is you look at the empirical data. Like it shouldn't even be. The traders must not realize the argument that they're actually making when they say things like that, right? Once you actually put it in those kind of terms and you say you're asking about you're connecting the veracity of a claim about market behavior based on whether or not a particular individual trader has made money or not is kind of dumb when you can just look at the data. So why does that keep coming up? Well, I'll tell you why. I know why. It's because they can't prove it with the data. Right? People tend to use the best argument available to them. If the best argument available to you is, well, I've made money from it, then that means that you haven't actually looked at the data. You lack the skills to be able to prove something using empirical data like that. And that's why it goes that way. I think that if you want to understand the market, look at the empirical data. And then once you've seen all of the empirical data, there are some pretty clear, well, because the market is like this, it makes more sense to trade this way. Very much is. But you take all of that and you trade. Are you going to be profitable with that? The reality of day trading is that it's so random, you can be doing everything right and still fail. Like you think about it, like, again, there's a distribution. There's going to be a distribution. Most people are going to fail because of the spread. Most people are going to fail, right? There's going to be a few people that made money, right? And if you actually have an edge, the people that actually have an edge, they might be able to trade like that. That edge might kind of bring you back to break even and overcome the spread. Or you might be really profitable, right? There's still going to be a person that has doing something that has a ton of edge and loses. Yeah, you can be doing it. Yeah, similarly, you can have somebody whose strategy is literally just random and make a ton of money. And like the funny thing is with the way that it works, there's probably more guys over here than there are guys over here. More people that had a ton of success and just got lucky than there are people that, well, actually, I'd even present it like this. Like here is people that really have edge, right? But there are so few of them relative to the number of people out there trading that don't have edge. That's like this. That it goes like this. So there's actually going to be more people that have no edge and just got lucky than there are people that really had edge and made a ton of money from that edge. So much so that I would bet you that it's like, if you look at of that year and there's like, a dozen traders that were really successful that year. And I'm going to bet you that 75% of them were just lucky. There's like no stats to back that up or anything, but that's just my theory of how the day would turn out if we were able to look at that sort of thing. Okay, I'm rambling now. We're well past time. I'm going to get going. I will try and make this video we want to make. So I will see you guys on Monday. Should be a lot of good data. It should be a very interesting week next week. So I'll see you guys then. In the meantime, stay excellent.